This is brought to you by John Daniel and Partners LLP.
Hello, good morning. Welcome to today's webinar. Thank you for joining us. My name is Frida Babu. I work in John Daniel and Partners LLP as the office admin. We are a CPA firm based in Kilimani, Nairobi, and we normally hold these webinars every other month. The webinars are free, and our key focus is on SMEs to empower them and to ensure that they do their businesses right with the help of professionals. So the webinars are majorly on accounting topics, audits, tax, and topics that are related to empowering SMEs. And our topic today is tax health checks for SMEs. Our speaker is Daniel Chege. Is the managing partner in our firm with over 17 years experience in the same field. And why this topic? Like, we want to understand the concept of the tax health checks for SMEs and why SMEs should really conduct these checks. What are the benefits of conducting the same to SMEs, and what's the urgency of conducting these checks? As we all know, there are various taxes that are relevant to SMEs, which I know we have come across, such as the VAT, withholding tax, the corporation tax, customs and exercise duties, and the payroll related deductions such as pay, NHIF, and the housing levy, NITA, all those. So we'll allow our speaker to take over so that he can guide us through the session. Thank you so much. Welcome, Dan.
Thank you. Thank you, Frida, and good morning to everyone. Frida, you can confirm I'm clear, and also my PowerPoint is up.
Yes.
The PowerPoint is clear?
Yes.
Great. Thank you. I will share ideas about tax health checks for SMEs, as Frida has mentioned, and as we had communicated in our poster through the different media platforms. And I'll also want to hear from the participants or their views about the ideas that we'll be sharing. So kindly feel free to share your ideas via the chat, maybe even questions, areas that you think can be of interest to everybody in the webinar. Here in John Daniel and Partners, one of the services we provide is tax advisory, and based on our experience, we have seen tax is a big challenge to SMEs, and because SMEs have the inherent challenges, not because the taxes are targeting them, but because of their nature, their nature in terms of size, their capacity to handle, tax issues, complex tax issues. Because the people who start SMEs are basically there to to make money, or even to sustain themselves and their families. But as part of conducting their businesses, they will face challenges here and there. And tax compliance, of course, is not why they were formed in the first place. They were formed to do business and grow and make profit. And so tax comes as a consequence of their existence, the fact that they exist and they are trying to pursue certain opportunities in the business world. And then taxes become a consequence, a natural consequence. So we just want to ensure that our clients and our potential clients are familiar on the kind of issues they face, and most importantly, discuss on the best way to go around those challenges. So we'll be discussing about the concept of tax health check, or what is this that we are calling a tax health check, and why do we need to conduct those tax health checks, and then what do we focus on when we are doing these tax health checks? What are the benefits? And then why do we need to conduct tax health checks in our organizations at this moment, and probably with a sense of urgency? Why now? We'll be asking ourselves, why now? So let me dive into it. I plan to take around between 30, 40 minutes in going through the presentation. But if you have something urgent, you feel cannot wait for you to voice it over in the discussion, in the Q&A or in the comments towards the end of the webinar, you can probably put it in the chat so that you can be able to look at it. I have my colleagues also. I'm sure they'll also assist me in checking and seeing areas they may think are important for me to address. Good, let's dive in. What is a tax health check? Now, as a tax health in itself suggests, those words, they suggest we are basically checking, we are reviewing. We are reviewing the taxpayer tax and accounting records to ascertain how far are we in terms of compliance? Are we complying with the relevant tax laws? And tax laws sometimes tend to be very complex. So a tax health check will also be unique to that particular organization. What is relevant? That's why that word relevant is very important, because there are very many tax laws. Of course, the main ones are, we'll be looking at them: income tax, VAT, and all that. But even within those laws, there are specific provisions that will be relevant to certain organizations based on what they are doing and everything. So many other factors. So what is relevant? How far are we, or are we complying with those laws? And we'll be looking at the records, what the records say. And so compliance will be looking at the tax laws and the regulations. And are there areas of risk? Is the taxpayer exposed? When we use the word taxpayer, we are basically talking of the SME, the organization that is being checked. Whether the taxpayer is currently paying or not paying, it doesn't matter. It's the issue of is supposed to be paying as a taxpayer or complying with certain laws. And then, of course, we quantify the exposure, if there is any. Quantifying meaning calculating to say these are taxes. These are the taxes that ought to have been paid. And then, if we say these are the taxes that ought to have been paid, we also ask ourselves: are there penalties? Are there, is there interest that maybe has accrued over time? And then we look at which are the best ways to mitigate those risks, or to address those risks, because those risks will need to be addressed. And of course, ultimately, that's the purpose of the tax health check. Then there'll be unique issues, the dynamics that will determine an SME's health status, tax health status. And remember, this is unique to every organization. We will not talk of generalities here. Just if I can use, since we are using the word health, if I can use the analogy of a medical problem. If you have a medical problem, everybody in the hospital, or every patient who has walked into hospital, been brought to hospital, has a health problem. And then, even if everybody has a health problem, each person has a unique health problem. That's why you will be seeing the doctor individually, and that's why you'll be sent for certain checks individually, because yours will be unique to you. You could be having a similar problem with somebody else, but your body dynamics, so many things about you, your age, your gender, will determine your health status, and ultimately what kind of treatment will be best for you. So similarly with organizations, what the organization is doing, the nature of its business, in which industry is SME. What is the business model? Is it doing online business? Is it a subscription-based business? Is it a distributor? Is it an agency? There are very many dynamics. Is it a franchise of another organization, a licensed? So what is the nature of the business, and what's the legal status? Legal status, we mean in terms of, for it to be formed, was it registered as a company, a private company, for example, a public limited company, a partnership, a sole proprietor, NGOs, and NGOs will also be diverse. There'll be societies, there'll be public, companies limited by guarantee, for example. The others registered purely as NGOs. So the legal structure matters. And because the legal formation brings in the identity of that SME. Then the geographical spread. Where are you doing business? Are you doing business locally? Are you doing business internationally? Are you doing cross-border business? Transporting to Uganda, transporting to Tanzania, Ethiopia, wherever? Are you in multiple locations? So depending on your geographical spread, you might require to comply with other laws besides the jurisdiction of Kenya. So that will also be a big determinant. Then the performance. How have you been performing your profits? Because if the taxman is interested in taxable profit, for example, then your past performance will be important. And your capital structure, the level of debt. Have you taken loans? Loans, there'll be interest, and interest expense is a deductible expense in terms of tax. Are you purely equity funded? That means funded by the owners. So that bit of capital structure matters. And then, of course, your history. If you're looking at your tax health today, your past will be important, past sins. And here we are conscious about the need to go ahead. And most of the time you'll find this is the biggest driver for somebody to do a tax health check, because you know what you have done in the past. I don't want to exaggerate the word sins, but here we are using it in terms of you suspect last year or the year before there were transactions that maybe you didn't charge VAT. There are some profits that maybe you didn't calculate properly, you didn't file the correct returns. So those are the things we are talking about. And of course, you may have been audited by KRA, or there was some compliance checks. Nowadays, they have what they call compliance checks, not necessarily an audit per se, but they're asking you questions to an extent that it really looks like an audit. And then regulatory matters like licensing for export processing zones, especially economic zones. There are some organizations, especially in projects, that also have certain exemptions, maybe because of international agreements between Kenya and multilateral financial institutions and all that. And then, of course, complexity of the institution, how complex the institution is, for example, in terms of the number of employees. And here there is also a relationship with what I mentioned earlier about the nature of business. Some organizations will opt to have consultants instead of having employees. And it also looks like a clever choice, but you need to be conscious of what you are doing. Are you making that decision properly based on what is right? That actually they are consultants, not employees. How did you deduct pay as you earn? All those things, they will matter very much in your tax health check. In terms of relevant laws, these are very familiar with us. VAT, and with every law, there'll be issues that or areas that will bring in challenges. If it, for example, is VAT, the purchases you made and how you recognize them in your books of accounts, and the sales, the inputs, input VAT, output VAT, the sales, your VAT, your invoices, did you include VAT? Did you file? Did you declare what you charge to your customers? And nowadays, of course, there is the ATMs issues, registration, and of course, going ahead to issue ATMs compliant invoices. Then withholding taxes, which are basically under mainly income tax, what we are very familiar with for withholding taxes is under income tax. Invoice, for example, you invoice as management fees, as professional fees, contractors' fees, and then a certain amount is withheld. For consultants, management fees is 5%, for contractors is 3%. And of course, there will be also the issue of whether it's a resident or not a resident. If it's a foreign consultant, the rates are different, also depending on whether whoever is charging you is charging from a country with a double taxation agreement with Kenya. Those are the dynamics. And of course, nowadays we have the withholding VAT. Withholding VAT is just VAT, only that if you have invoiced, of course, the client or the customer you have invoiced pays you less a small portion, say 2% of the tax, of the amount that has been invoiced. Instead of 16% paying you plus the 16% removes 2%, so that pays you with 14%. And of course, these are strategies which have been employed by the taxman to ensure that more and more taxes go his way. But these are dynamics that we need to be aware of and ensure that we are complying. Of course, the corporation tax, what we call corporation tax, is basically income tax on companies. And this will need to be paid in installments. And there's a way of calculating those installments. Then there's also advanced taxes. Advanced taxes mainly affecting certain sectors like transport. If your company owns vehicles, when you are doing your annual inspection of commercial vehicles, the commercial vehicles are usually lorries and pickups. You pay advanced tax. Then annual returns that you file at the end of the year. That's basically, those are the issues that go with the corporation tax, and which is basically income tax on corporations. Then customs and excise. Customs duties are basically duties to do with the import and export, mainly import transactions, but there are some unique exports. Maybe the government would want to restrict certain exports, so they also charge export duties. But for income, for customs duties, imports are the most common ones, because especially Kenya, because we do a lot of importations. And then, of course, there are excise duties. Just to mention, nowadays, those who do imports, they could be aware that nowadays the customs systems, the imports systems, are also they are able to compare information with iTax, meaning the taxman can be able to see how many transactions or what you have imported into the country, and how you have exported out of the country. And of course, when you are making an import, at that point, there are some duties which are paid, import duty, even VAT. And good, I mentioned that with the customs, it's not just a Kenyan issue, because now we are under the East Africa Cooperation. So it's an agreement, it's a law that is only an agreement of the other partner states. That's why we call ourselves a customs territory. It's not just Kenya deciding to do a change. So Kenya will have to consult the partner states. And you'll find even when you talk of the finance bill in Kenya, when you are amending the national tax laws like VAT and income tax, we will not talk about changing the relevant customs act, which is the East Africa Customs Management Act. If you are doing international business, that's very important to be aware of. Because sometimes people who do imports, they just get what has been calculated by the customs clearing agent, and they pay, and they assume that's the end of the transaction. They need to do very good accounting to ensure that whatever was paid at the point of import is incorporated into the books, and the very correct calculations are made, and the relevant returns are also factoring all that. And then, of course, there are payroll-related deductions, which are nowadays very many. Many employees have been complaining, and the owners of deductions of those payroll-related deductions, is on the employer, and therefore the employer needs to be having very good ways of calculating that pay as you earn, which is a way of deducting income tax on employment income. And of course, the other related ones, they may not be taxes, but they are deductions, and they'll have a bearing on the level of compliance on statutory issues like current NHIF. There'll be reliefs. You have insurance relief, you have personal relief, and then of course there is a housing levy, there is a NITA nowadays. So very many areas of compliance that need to be checked. Why do a tax health check? So here we are basically saying that checking before or prevention is better than cure. I mean, the old adage applies here. Is the only guaranteed cure. Because if you can be able to prevent problems, then you are guaranteed that you are in the safe territory. So the first thing is to know, and if you don't know, then you are exposed. So it's a risk management approach, and you are doing it proactively. So you are taking it at the necessary steps before the taxman comes. So it's a timely remedial action before that taxman call comes or before the email comes from the taxman. What do you need to have done? Then we should also be aware that there is always a 5-year tax window, because I think it's the Tax Procedure Act which provides for 5 years that the taxman is empowered to come. Today we are in 2024. I can come and ask you for records of 2019. You may scream about how unfair it is, how you forgot about such things. But remember, nowadays the taxman is very good in terms of record keeping, very good in terms of comparing data from different taxpayers, and also in terms of record keeping, the taxman has very good records on what you did, what you filed, and probably what you did in relation to other people, other traders, your business colleagues, in terms of you are selling to your customers, you are buying from your suppliers. So whatever you did 5 years ago, 4 years ago, 3 years ago, that's a window the taxman can use to ask you for records and prove that you are the right. But also a point of caution that the taxman is still empowered even to go beyond that. If he has information, he has credible evidence that you have committed an offense, even if it's 10 years ago. Remember in our laws that if you have committed a crime, there's no limit. We know in theory that is the case, and sometimes old crimes tend to be forgotten because we are human beings. But if you have committed a crime, and many of the tax provisions, if you are not complying, the taxman nowadays is even taking taxpayers to court. I believe you have seen it in the newspapers or in the social media, where the taxman has just done an assessment and sees what you have done is a criminal in nature, and therefore decides to prosecute you as a crime. So it's not just recovery of taxes or recovery of tax arrears. And in that case, the taxman can go well beyond the 5 years. Key areas of focus: tax compliance. Compliance here is I mean, compliance is big issue. It's a big issue for SMEs nowadays. While the returns filed correctly, those are the issues we'll be looking at. What payments made against those returns? Because one level of compliance is to file a return. The next one is to pay the relevant taxes and pay on time. Have you done the correct calculations? And tax calculations sometimes they become complicated. That's why professional advice is necessary, because these are calculations, and these calculations are based on the legal provisions. And then have you utilized the reliefs that as they are supposed to be utilized? There is always a tendency to favor yourself when you are doing something, and that's why professional approach is usually the best. You'd want to minimize taxes as much as possible, and many people would want to assume they are clever enough to outsmart the taxman. It's natural to understand why, because I mean, you are the heavy responsibilities in terms of running the business. You want the business to do well. You want the business to succeed. Pressures are coming from all corners. You need to pay staff, you need to pay rent, you need to pay all manner of expenses. But again, the taxman is there waiting for you. So there is the natural tendency to feel, why should I pay all this? So those are the things we are talking about. Records, the way you have documented your transactions, have you documented properly? In the tax laws, the issue of record keeping is mandatory, and is a responsibility which is on the owners and the directors of companies, for example. You cannot say, I don't have those records. It becomes a non-compliance issue. You cannot hide records to show so that you hide your problems. You are obliged, and the tax laws are usually very powerful, and it's not just in Kenya. This is naturally global, because if you even remember, in the Bible, people are not very happy paying in the old days during Jesus' time. People are not very happy because the government, which was then led by the Romans, was imposing taxes on them, and they were not happy with it. Why? So that bit of keeping records it has been there, and so tax laws have been empowered over and over. They have been revised to ensure that the tax authorities have the power to check. They have the power to demand certain records. So we'll also be focusing on the risks. What are the potential risks? How can they be mitigated? Ensure that you are prepared for tax audits. If there are inquiries, how do you approach a tax inquiry? I usually tell my clients that KRA people don't personalize the relationship with the KRA. If you personalize, and it's not just KRA in a government office, the officers who are employed there, and they're just working, they are doing their work, the ordinary. I mean, they are human beings like yourselves, and they would want to do their work in the best way possible. And their work, by its nature, is not an easy job. They are looking for money for the government, and they are doing it in the best way possible, and with a lot of austerity. With crafty people sometimes, with the people who are trying to hide certain things. So it is important that we are able to look at how well can we be able to address those things, and what are the opportunities for tax planning, and of course within the laws. There are no magical ways. Is a way. There are no magical ways that make people. And of course, I know people will read books here and there, and they hear that people US, Trump is not paying any taxes because he's very smart. But you don't know the inside of Trump's organization. You don't know the unique issues. And you also don't know the unique tax laws that favor him in whichever state in the US he operates from, or whichever country he operates from. You don't know. That's why tax health is very unique to every organization. And of course, we are aiming to recommend improvements. Then as I mentioned, there are also compliance issues relating to employees, statutory deductions, the benefits to staff. If, for example, you are giving loans to your staff, there are requirements on loans. Those are benefits to employees. Are you deducting them? Are you calculating properly that benefit? If you are giving a benefit like a car, for example, some employers become clever and they decide to get part of the employment, part of the salary and tax it, and then the other part they don't tax it, so they pay, for example, rent for their staff directly to the landlords. Those are issues that we need to know how we are handling them. Is it the right way to do it? And if it's not right, how can you make it right? You may have done it in the past. How can you make it right? Then internal controls and the processes that we have in our organizations. Sometimes you may have good intentions at the top leadership, but how is your accounting? How are the transactions happening? I know of organizations where one young man in the finance department will do the calculations and prepare a voucher to pay somebody. Let's say a payment was supposed to be made less withholding tax, but that has not been done, and a voucher has been prepared. It has been approved. Somehow it has kept the attention of the approving authority, and the money has been paid. But the top management is not aware, because you just paid. There was a small amount. You not even bother to know how much were we supposed to withhold. Did we withhold? So we need to ensure that our processes are clear and they are able to facilitate prevention of such things. As we do tax health checks, we benefit, in compliance. We get assured. We feel we have done it right. The fact that we prevent penalties and any fines that can come out of non-compliance. Then we update ourselves. We stay updated. We get to know about the tax laws and preventing the future. And therefore, potential saving opportunities. Sometimes people worry so much about the professional fees they may be charged for a tax health check. And is probably a very small percentage of what you are saving, the problems you are preventing. So it is very important to know the opportunities that come with it. And then you're able to plan your finances in terms of your reporting, when to file returns, how can you make decisions right in terms of capital structure or for your organization. Prepare for growth. You're able to focus once you know the kind of responsibilities, the kind of transactions you are entering into. You get more confidence, and you are able to invest more confidently for growth, having complied with the tax requirements. Because from the outset, the business was not formed to pay taxes. The business was formed to grow. It has its own purpose, its own mission, why it was formed, and it is serving clients. It's investors have put in money. They want to ensure that they grow, they do better. and that growth can only come in if they have got the right advice, they have guided properly, and their focus is the right area, and they are able to mitigate the risks that go with that. So, and with those risks, you know what to address. With the same example I've given of a young man who is preparing a payment voucher without withholding. So how do you prevent such things so that the whole system in itself is compliant? You don't have to get surprises at the end. And of course, with that, you achieve efficiency in terms of having good processes. You don't have to be checking things in a very thorough way if you have already invested in good processes. Then why now? Why now? Why you need to do the tax held with a sense of urgency in the current environment? And it's good I take a minute to do this. I'm not very far away from concluding on the presentation, but it's good I take a minute to just give an overview of how we have been operating as an economy here in Kenya. If you look at the cycle of elections every 5 years, politicians are very good at making promises, very, very good. And of course, the general public is very much enticed to vote for certain candidates based on the promises they have made. I am aware you have seen our expenditures as a country have been climbing up and up. Every candidate would want to make promises. I will increase government salaries, and of course the government people feel happy. I will increase police salaries, the police feel happy. I will increase teachers' salaries, the teachers are of course happy. That means increased expenditure for the government. We are going to do roads here, and of course we are very happy that our places become accessible. All those are expenditure obligations, and of course with every obligation, we should know that governments make money globally by taxing their people. There are a few governments that have huge natural resources, like in the Middle East, there'll be talk of oil and gas, for example, in the Middle East, and those governments, they rely a lot on those natural resources. But it's not for us here in Kenya and probably in Africa. And majority of countries globally, they rely on taxation for their government revenues. Now, I have talked generally about the cycle of 5 years, but look at the current government. I think that the current government, in my view, has, as much as the president has tried to push for increased taxation, even where we are getting names like Zakayo, it is kind of a transition. It is kind of a transition. A transition in that the government has identified that there are few taxpayers, and it can utilize technology to get more people into the tax net. We used to have VAT ETRs, and these were ETRs which were not, if I may use the word, they were not clever in terms of connecting. Now we have e-teams, and e-teams, for your information, if you are not aware, it's not a Kenyan issue only. Tanzania is already there. Rwanda is already there. And of course, more developed countries are already there. And what is the e-teams? It's exaggerated in the common talk in the street. E-teams, but many people don't understand it. But in summary, e-teams means what you are doing, you are doing it through KRA. Every business every transaction you are entering into, you are doing it through KRA. That's the aim. So if I'm selling to my customers and I'm going through KRA. Going through KRA means KRA has known that I have sold 10,000 today. It has known I've sold 100,000 today, and likewise. For expenses, I have been charged this amount. KRA is also aware. I have exported this amount. KRA is also aware. I have imported this amount. KRA is aware. And technology is basically a gold mine. Is a godsend for governments, because the government is able to do that. A few years ago, if you remember, we were queuing to give papers every 30th June. There used to be very long queues. Those who remember many years back, income tax up there at community. Income tax house is the current Milimani courts, for those who are not aware. The current Milimani courts used to be called income tax house. Income tax house, people used to queue there. Then KRA, of course, was formed in the mid 1990s, I think 95, 96. And Times Tower came up. Queues outside Times Tower used to be very long as 30th June approached. People are giving papers. And those papers, because I also worked in KRA for quite a number of years, those papers used to be put in kind of gunias, and very many people be employed to sort them out and key them in and all that. You can imagine how tedious it was. And here comes technology where people can do it online. The government has invested in technology where people do it online. If you are to get statistics on the numbers, you'll be amazed. The number of taxpayers has gone up. You can be sure those numbers will go up and up with e-teams. There will be very many people into the tax net. Not only more taxpayers, but also more in terms of declarations, more correct declarations, because as I've said, you are going through KRA to declare. Now, that means you are very visible. Unaonekana na KRA. And it should not be scaring. It should be the right way if you think about it. It should be the right way, because if you are doing it right, there is nothing to hide. You are just doing your business. And that's why you ought to have a very important philosophy of tax compliance. An important philosophy of tax compliance. So if you have decided to be tax compliant from today, as I said earlier, then they are also committed in the past. You need to ensure that you correct those things. And that's why even the government gives in what is called tax amnesty, where you are told to declare correctly. And as you declare, you become visible. You are forgiven for part of your whatever you made by maybe not being penalized, or maybe not being charged interest. So all those things, they tell you that it's important. And if you have seen, KRA has become very, very, very strict in terms of compliance. People will talk in the social media, in radio stations, on TV and all that. But your focus is running your business. You want to succeed in doing business. You don't want to be interrupted by KRA. Not because KRA is bad, KRA is doing its work and it ought to be doing that. But you want to ensure that you are growing sustainably because you are not distracted. So as much as the people will say maisha ni ngumu, you agree all that, but the taxman will knock at your door alone. The taxman will send you a tax compliance check alone, and you can go and shout about it and say no, KRA is unfair, but they'll always come for you alone, and not, in my view, not one should not personalize those matters. After you've done your health check, now as I conclude, as you do your tax health check, what do you need to do after you have done your tax health check? You need to stay updated. You need to know what tax laws are relevant, and the tax laws will still be coming every now and then. And you don't need to think that because you are compliant today, tomorrow you are. So you need to know how to stay compliant. I always say that the tax compliance certificate that we give KRA gives is usually a misnomer, because you cannot be compliant in the future. If you think about it, you have been given the tax compliance certificate today. But again, as you get it today, the next minute you are entering in transactions and maybe you are not compliant. Maybe today you are supposed to file a return and you didn't file, or tomorrow you're supposed to file a return. You see, those are things that we need to ensure that we stay compliant. And of course, we retain accurate record keeping. Tax starts with the bookkeeping and accounting. Tax compliance is not in itself alone. Tax compliance is an issue of tax compliance in itself is an issue of having the records that you can declare. And as I've said, that bit of having having the right information is the first step. Is the first step. You cannot be tax compliant if you don't have your books in the right way. So start with good accounting. And nowadays there are very many efficient ways of doing it. And it's important if you don't have an accounting software nowadays, there are very many accounting applications that can help you to do that. Seek professional advice, even in choosing which is the appropriate software for you. In our firm, we use Xero. Xero is our platform, and we use it. We deploy it to our clients, and it is very convenient because you're able to serve clients with it. A web-based platform that clients can have access, and we also have access based on what you have agreed with every client. And then good to do regular reviews once in a while to be sure that we stay compliant. If we stay compliant, then we don't have problems. We are able to prevent future problems with the taxman. Then the other bit is this will be my final slide in terms of compliance. Is basically conclusion. We are saying tax compliance is essential, so, and it's unique to you. Don't look at it like a bother. Plan for it. It's one of those things that people who are running organizations don't deem to be urgent, but is the most important, is a very worthy investment for you. And you are able to prevent risks. You ensure you are compliant, therefore you are basically putting your business on the right path, because SMEs have many problems. And when you are really pushing those problems, you don't want somebody who is coming back to you and telling you you have problems, because you already have enough in your hands. You are trying to balance your cash flow. You are trying to get customers as fast as possible, to sell as much as possible, to pay your suppliers. So you don't want somebody putting his hand on your back and saying, "Hey, boss, you have not paid this." You want to be in the right place. And to start that off is to ensure that we don't leave it to some future unspecified date. It's a very it's very funny how we think I'll do it one day. But if you have not set a date when you'll do it, how you do it, then it's not part of your plan. So it is just a wish. And you should ensure that you do that, of course, before the taxman comes for you. My prayer is that you don't get the taxman coming before you. So before you do the tax health check, so ensure that you do plan for it in good time. So I will add at this point and request Frida to take up, and maybe we can have questions, comments from the participants. Something to emphasize, if my colleagues, I may have missed on one or two things, so that we can be able to address any concerns people have. And I'm just going through the list of participants. I'm noting some of my colleagues there and my clients. That's very good. I really appreciate. I appreciate you, Arjun, for being present. I appreciate Charles Moruga, my old friend from college. I'm sure you'll also, and he's a professional accountant also. Charles, maybe you'll also have in a comment or two if it's okay with you. It will be good if you can do that. So let me pause at this point. Frida, you can take up and maybe invite anybody who may have a comment or two. Thank you.
Thank you so much, Dan, for that wonderful presentation. We appreciate. So we give room for anyone with a question. If you have a question, feel free to unmute and raise your question, or you can use the chat section area to type your questions, and then we will address them. Bwana Charles, feel free to share your comments.
Frida, I think Charles is not. Maybe he can comment later. I think you better take up, or maybe if there are also other comments.
Okay. There are no questions in the chat section area. What I can see is people inquiring whether we will share the presentation later. Yes, the presentation will be shared to everyone that has participated later in the day. I can see a comment from Arjun. He's saying thank you for an informative session. no hand is raised for questions. So as people prepares to ask questions, okay, there's one from Shadrach Mwangi. Is asking, a corporation tax of 30% is normally charged for entrepreneurs. What risk does this pose to business applying for tenders?
Thank you, Shadrach, for the question. Okay, let me respond to that in the best way I can. First, the word entrepreneurs, maybe for those who may not know, it is applied for those who put tenders, especially to government and big institutions or government corporations. People who bid to tender is basically to place a bid. You are basically telling the government you are ready to provide certain goods or services at a certain price. And honestly, for me, I'll tell you, in my view, to say one is an entrepreneur, that's not a business. I'm not saying you'll not make money, but in my view, that's not a business. A business ought to know, or a business ought to have exactly what do you do in terms you sell. What do you sell? If you sell goods, let's say, for example, stationery, and you target the government, that's a business. So the government becomes like one of your clients. And those who have transacted with the government also know that sometimes, and I'm not saying it, I don't want to sound like I'm against those who are doing business with the government, but sometimes you'll find the government officers, some government officers will put pressure on people to engage in unethical practices where they want to be bribed for them to approve such such bids, or they want some, if I can call it incentive in quote, for them to award you. So as much as we may call it a business, and I submit tenders may sound like a business. To me, that's not a business. But it's a business if you have decided consciously that you'll be selling stationery. And then selling stationery, that example that I've given, selling stationery, you are targeting big institutions like government, government corporations, private institutions. And of course, with that, you have assessed the risk involved. One of the biggest risks, the common risks, is that you may not be paid soon. It happens. The government you can supply and they can stay for several months or years before you are paid. So along with that now, we come to what Shadrach is asking. The 30% is 30% of what? Is 30% of profit, taxable profit. And you'll find the government has put in place certain incentives to encourage certain groups of people to do business with it. One of them is women. Women have been given certain privileges. The youth have been given certain privileges for certain types of businesses to transact with the government. One advantage of dealing with the government is a scale. You do a lot because the government is a heavy spender. It's the biggest spender actually in every country. It's not just in Kenya. So you have an advantage of scale. Opportunities are many. But alongside, don't forget that the competitors are also many. So you will pay certain, there could be a certain percentage, which should be a percentage of taxable profits. So along with what I had said earlier, it's just an issue of doing your accounting right. You have supplied to the government, therefore you have been invoicing the government. An invoice represents a sale transaction. And then cumulatively, those invoices, 1, 2, 3, they will accumulate to a sales amount in a period, what we call revenue per period, per year. For example, for the last 12 months, you have sold this much to the government or to whoever other customer you have sold to. So it's not just an issue of whether you are entrepreneur or not. It's an issue of 30% of taxable profit. And along with that, there will be deductions. So the risk that you may be exposed to is an issue of how the government paid you. If it's, for example, VAT, if you are registered for VAT and you file a return every month, by the 20th of the following month, you are expected to have paid as the government paid you. Those are the kind of risks I'm talking about, the cash issues. Even at the end of the year, if, for example, you just took a big loan so that you can meet the capital requirement in the transaction, are you able to pay for that loan? Those are risks that people are exposed to. There are many organizations that have collapsed because they supply to the government, supplied computers, probably 1,000 computers. We are talking of investments in millions. And then you don't get paid in time. There will be court issues. You drag the government to court. You win the case. You still wait to be paid. You see, those are the challenges that go with the business that we call entrepreneurs. I don't want to dismiss it. There are many people who have made a lot of money with it, but you need to be very conscious of what you are doing, the risks that go along with that. And of course, one of the risks is to do with tax compliance. So how can you be able to comply with the taxes? Allow me to pause at that point, unless there is something else somebody may want to add.
Thank you so much, Dan. Shadrach, I hope your question has been addressed. I can see CPA Charles Murunga as his hand raised. Maybe if you can unmute.
Thank you, Dan and team, for putting such a good presentation. I hope you can all hear me. I won't take too much of your time. I think from where I sit, and Dan alluded that we were classmates in college, is a lot of the times, many small and medium businesses do not invest in the finance and admin and tax aspect of their businesses. So what you find is that sales and marketing and operations become the focal point, and finance and admin and tax take a back burner. And what I can say from my short experience is that the difference between multinationals and medium-sized companies and SMEs and entrepreneurs is the fact that the big companies take time to invest in finance and admin, because it then allows the business to scale and focus on other things. That said, I want to thank you all and give me the opportunity. Thank you.
Thank you, Charles. Thank you.
Thank you so much, Charles. I can see there is another question from Patrick Joroge. Please help me with some basics of turnover tax for an SME who needs to pay it. Is it 1.5% of gross sales or profits? An overview of the e-teams SMEs.
Not sure I understood the question. Can I request my colleagues, John? I don't know whether John is in the webinar. Maybe he can assist me on that, or
Yes.
Beatrice.
Thank you, Dan. I think what Patrick is asking is if the turnover tax is taxed on the gross sales of the profit. So to confirm, it is charged on the gross, and it's a final tax. You will not need to declare it elsewhere. I hope that answers him well.
Thank you, John. Patrick, if it would be good if you can also get in touch with us. Just for clarity, also sometimes it's very easy to overlook the circumstances surrounding it. We can be able to address the question and maybe suggest for you a way forward. And we will not be sending you an invoice for responding to your question during the webinar. So, or even after, before we charge our fees, we always are in a mutual agreement with our clients that we are doing this at a fee, and this is the best way up forward. So responding to your question, we will be able to respond and probably even get more clarity about the circumstances or the challenges you're encountering. We can have that discussion even outside the webinar. We'll be happy to help you further. Frida.
Thank you so much, Dan. Patrick, kindly get in touch at the end of this conversation, then we will be able to help you. This marks the end of our webinar. Thank you so much for tuning in and listening to us. We appreciate your time. Dan, unless if you have a parting shot or anything else that you'd like to add before I go to the farm presentation.
Thank you, Frida. I've noted. I've noted. Patrick is asking about the contacts. So from the screen that we have up there right now, you can see our contacts in terms of the physical location of the office, our website, our email to contact us, and even the phone number. So there are different ways you'll get in touch, and we'd appreciate if you can do that maybe for a discussion even after this webinar. So mine as a parting shot is just to thank you and tell our clients and our potential clients that we really appreciate you, we value you. So just ensure that philosophy of tax compliance is part of you. And out of that, you'll be able to leap and grow your business. So we pray that you don't get into tax problems, but when you go through them, don't think it's personal. Just try to manage through, and I'm sure you'll be able to succeed. And make sure your business succeeds well in fulfilling its mission. So thank you very much humbled to be part of the presentation, and thank you my team also, the great team at John Daniel and Partners. It's really a pleasure to have you, working with you and hosting such kind of forums. Thank you very much.
Thank you so much, Dan, for the wonderful presentation, and to everyone that has been part of this webinar. We appreciate your time and your dedication. A reminder is that we normally have these webinars every other month. So watch out for our next webinar, which will take place on 27th August. That will be communicated via emails. I'll send you reminders and the link for registration. We are John, Daniel and Partners, a CPA firm based in Kilimani, Nairobi. Our services, we offer services such as bookkeeping and accounting. We also do internal and external audits. We offer tax advisory and management advisory. So you feel free to reach out to us via the contacts provided there, displayed on your screen. You can reach out to us via email, info@johndaniel.co.ke or call 0722 817-818. We will be happy to serve you. We are a team of professionals with CPA finalists and zero certified advisors and people who are passionate about business and consulting. We will be happy to offer you the professional advice to steer your businesses to growth. Yeah, as you focus on other aspects of your businesses. Thank you so much for attending our webinar. The presentation will be shared to your emails later. Feel free to leave the webinar. Thank you.
This is brought to you by John Daniel and Partners LLP.